Welcome back. It's time now for Hot Picks. As global consumers cut back on spending, there's often one thing they historically don't give up on, and that's makeup. In fact, back in 2001, the term lipstick index was coined to describe the uptick in makeup sales typically seen during recessions. Today, our Hot Picks guest has 3 beauty stocks that could benefit as the economy around the world slows. Korinne Wolfmeyer is senior equity research analyst at Piper Sandler. I misstated the name of her firm prior to the break. She's with Piper Sandler. Korinne, thanks very much for joining us. Tell us, first of all, about the sector during difficult economic times. Has it been true that makeup sales, cosmetic sales, tend to increase during periods of economic slowdowns?
Yeah, absolutely. And thank you so much for having me. So, the makeup and really the broader beauty category has held up very well throughout COVID, and then even now with recessionary fears looming. A big piece of this right now has really been the rise in self-care that we've seen coming out of the pandemic. We were locked down in our homes for years, really with excess money to spend on making ourselves feel good. And this is a type of expenditure where once you start, it is really hard to stop, and it does become more of a staple. We're also seeing, like what we've seen in the past, the idea of being able to spend on little luxuries that make you feel good. Makeup and beauty, it's an affordable luxury. You're not spending thousands of dollars on a handbag. You're spending $50 to $100 on a bottle of perfume, or in this case, a thing of lipstick. Looking to, this year, we are looking at themes of a potential trade down from prestige beauty to mass beauty. And we're also looking at big recoveries in China and travel as other sources of rebound beyond just the lipstick index.
Okay, let's go to the first of your top picks, Skin, the beauty health company. It's your favorite pick right now.
Yes. So Skin, a beauty health company, ticker SKIN. We have a $16 price target. They are known for the HydraFacial, and that is a non-invasive facial. It's done in a slew of places like med spas, resorts, and even some Ulta Beauty locations. This aligns with our theme of self-care and spending on what makes you feel good. And then when we also look to 23, we want a company that has good growth, good margins, and key catalysts. And that's what we get with Skin. They're going to grow over 25% this year. EBITDA is going to expand about 600 basis points. And then they have a key catalyst of launching a new delivery system in international markets in Q2. And this is the system that administers the facials.
Next up is ELF. ELF is the ticker symbol. The name of the company is ELF Beauty. This stock is trading in all-time high territory and has been on a tear so far this year.
Yeah, so ELF, they're known for the mass beauty brand ELF. They also have clean beauty brand Well People and prestige beauty brand Keys Soul Care. As you said, the stocks had a lot of momentum, but they are executing extremely well and they're capturing share. It's going to grow nearly 40% this fiscal year. EBITDA should be above 20%. And the brand continues to rank as the top makeup brand for both average and upper income teens in our semi-annual Piper Sandler Taking Stock with Teens survey. We see great growth potential with shelf expansion opportunities within their retail partners like Target, Walmart, and Ulta. And most importantly, this name aligns perfectly with the trade down theme that we noted earlier.
And what explains the remarkable share price performance that we've seen over several years now?
Yeah, I really think it's a testament to management's execution. They've also brought in a astounding marketing and branding team. They are the first movers with marketing to Gen Z and marketing to teens. They're quick to move on social media. They're now on BeReal. They were the first beauty company on BeReal. We're now seeing them trial out other forms of advertising, like putting Jennifer Coolidge on the Super Bowl in a Super Bowl commercial. We're also seeing them now put billboards all around big metropolitan areas. So they are so quick moving and innovative with their marketing tools, and they are adapting with their consumer.
And next up, and the final topic in this segment, a name that almost everybody's familiar with, including myself and many of our male viewers, Estee Lauder, a giant in this space.
Yeah, so we really like Estee Lauder. Ticker is EL, our favorite large cap name. This one has definitely had a bit of a tougher run lately. It does have outsized exposure to China and travel. About a third percent of sales come from China, a quarter of sales come from travel. So growth and margins have been pressured, but we do feel very strongly that once a recovery does come, especially in China, it will be huge for Estee. They should return to above market growth, and EBITDA margins should get back to nicely 20%, or nicely above 20%. And the main thing we think that isn't fully factored in here is just how big the opportunity is in Hainan Island, which is a major shopping destination off the coast of China. It is growing rapidly, and we do see potential for it to add almost $1 billion in EBITDA to Estee Lauder in the coming years.
What kind of valuation metrics do you use to find value in the cosmetic stocks?
Yeah, so we're really looking for, are they able to deliver good quality margins? We want to see, mid upper teens, even 20% plus margins. We also want to see above market growth. And if we see those plus like what I noted earlier, some key catalysts, then we see opportunity for it to, for them to trade, above a lot of the other peers we see in the consumer space. I do think this category deserves a bit of a premium versus other areas of consumer spending, like what we said earlier. It's far more resilient. We do have clear evidence of the lipstick index playing out. And we're seeing a ton of innovation that's not only driving consumption, but it's also driving pricing higher. So it does deserve to be a little bit higher valuation-wise versus other areas of consumer.
You've mentioned the trade-down phenomena where less affluent consumers become more significant purchasers of these products. You also see a trend in dupes or copycat products that are available at lesser prices. Explain.
Mm-hmm. Absolutely. So we're seeing a big trend of some lower cost brands. e.l.f. is an example, coming out with products that are kind of copycats to some higher priced alternatives. So e.l.f. has done very well with its Halo Glow filter. We've also seen a name like Sally Beauty. It's another name we cover and we're big fans of. They've launched a number of kind of copycat products within the hair care category. And we are seeing consumers, flock to these products, especially now when wallets are feeling pressured. If there is a product that is good quality, it's effective, it actually works, and it also has some sort of science backing or innovation in it, and then it's at a lower cost, the consumer is going to be far more inclined to buy that product versus the $30, $50 alternative. And so while in terms of trade down, we don't think we're going to see a significant shift, but we are seeing slight signs of trade down, especially to these copycat dupe products. Those are the ones that are going to be the most successful.